and have a good weekend. Okay, Mayuresh Joshi joins in with his thoughts. And Mayuresh, good afternoon. It's been a week full of interesting results. One is coming out tomorrow, and that's DCB Bank. Now, any thoughts? IndusInd Bank has started off on a good note. South Indian Bank was actually not that bad. DCB, the way it's moving up, seems to suggest that the market expects a positive surprise here.
Afternoon, Neeraj. So after the Q2 results of DCB, I think there is enthusiasm building up in terms of expectations that the bank will deliver. But largely, again, I think out of the results so far, I think there have been no disappointments per se with the entire demonetization saga playing out. The loan growth has been still commendable for banks like IndusInd, and even South Indian Bank did not disappoint in terms of their core numbers. So in that sense itself, I think the kind of RBI directive that has come through in terms of the 60-day forbearance on SME loans, how that actually takes shape in Q4 is a subject matter to be watched out for. But largely, again, I think even with expectations of credit growth picking up and credit costs remaining elevated for corporate facing banks, Q3, Q4 might still be under stress in terms of recognition of a large part of their watch list. Similarly, for public sector banks, how much actually comes through in terms of the non-interest income component with booking done in Q2 in terms of treasury gains, how much left is in balance in Q3, that is also a question that needs to be looked at in terms of delivery of numbers. So largely, again, I think from a financial year or a fiscal year perspective, and over the next 15 to 18 months, I remain extremely optimistic on the financial space. Within financials, large sector, private sector banks is something that I'll continue to like, large public sector banks, and selectively between the smaller private sector ones. So again, I think keeping my optimistic view on the banking space, barring Q3, Q4, which might be a little bit soft for a few banks, I think the recovery can be equally sharp in the first half of FY18.
Mayuresh, are you constructive on sugar? The stocks, after a couple of days pause, are restarting their uptick. Balrampur Chini in intraday session actually hit fresh 52-week highs for itself.
So again, I think going on a structural top-down macro perspective for sugar, and the estimates that ISMA has come out with generally in terms of expectations for this sugar crushing season, the carryover inventory from last sugar season was somewhere around 7.5–8 million tons. If you're expecting the production this year on the domestic front to be anywhere between 23.5–24, and again the demand staying around 25.5 to 26 million tons, you're left with a carryover inventory of less than 4.5. So in that sense, I think the realizations that have actually come through in terms of sugar prices per kilogram, they are on the uprise. And again, I think my own sense is that if these prices stabilize, you're probably going to see better cash flows still remaining on the balance sheet for this sugar season. Now, a large part of the inventory gains that sugar companies enjoyed with lesser sugar stock carried in their books has largely been booked. So to that sense itself, I think the production numbers which are expected to be deficient, specifically from Maharashtra and Karnataka, and probably getting offset with UP with higher FRP and SAP prices declared by the state government, the sugar season for this year should continue doing well. So again, selectively, I think sugar stocks should do well because this season again should be in favor of them, both in terms of realizations and demand-supply dynamics working in their favor.
Mayuresh, a lot of active companies which have results next week. I think Graphite India comes out with the results next week, up about 4%. There are a couple of others that I saw. Interestingly, Delta Corp also comes out with numbers next week, and it's now trading at 134, which would be the high for the last couple of months as well. Any thoughts here? I know I'm sticking to mid caps, but a lot of active mid caps today. Any thoughts? Graphite, Delta Corp, maybe a couple of fertilizer names which come out with the results next week.
So then I think not actively tracking Delta to that extent, but again for fertilizer companies, Neeraj, one must really understand because of neem coating of urea, and urea is still used and is government controlled, you're probably seeing in the first half volumes have actually come down, and that to a certain extent has got compensated with prices coming down for the N&K portion of the fertilizer industry. Farm gate prices are down, the inventory levels for fertilizer as an industry overall are down close to 1.8 to 1.84 MMT compared to 2.9 for 2.98 MMT. So to that extent, I think there is less carry forward stock that is probably coming through, and with expectations of government in the budget specifically towards the agri industry as a whole, fertilizer industry, which depends a lot about subsidy payouts from the government, if there are any announcements related to DBT on the fertilizer part, I think a bunch of these stocks can really continue doing well. There has been fall in terms of gas prices that has taken place, and because of that you're probably going to see input costs coming down, but that will probably get offsetted with a month's credit extension that the government has given in terms of farmer receivables. So the receivables on a lot of fertilizer companies can probably get elongated in Q3, Q4 because of the demonetization effect. So largely again, I think if DBT benefits start accruing to fertilizer companies in a more fast and efficient manner, the whole sense and the whole dynamics of this industry will change for good. And again, I think the pricing that we're probably looking in terms of urea and NPK, I think urea is still controlled by the government. If there are some levers happening on that front, along with feedstock prices which are expected to pass through for NPK as a subsidy, my own sense is that fertilizer as an industry can really do well. So yes, I think I'll be looking forward in the budget statements related to what happens for the fertilizer sector as a whole, and if there are any announcements related to DBT on fertilizers, I think it's a big push through for the sector as a whole and very positive for the sector.
Right. Mayuresh, what about your view on banks and particularly the pecking order in private sector with IndusInd's stellar numbers?
Afternoon, Tanveer. So again, IndusInd Bank has reported a very steady set of numbers. Even their annualized credit cost outlook less than 60 bips is commendable in a situation and an environment that you're currently operating out of. So largely again, I think as credit growth starts picking up and within their core portfolio itself in terms of loans and advances, the CVPV side of their book, including the personal book, I think once that starts showing traction, and the management is very hopeful of that, and again hopeful of maintaining their NIMs in that respective band of 3.9 to 4%. My own sense is that the premium valuations that IndusInd gets can very well be sustained. So it's a clear hold in terms of IndusInd Bank in terms of price performance. But largely again, I think the corporate facing banks, as I was mentioning earlier, Q3, Q4, I think in terms of their watch list and provisioning, a whole host of measures have already been taken by the banks in Q1, Q2. Provisioning will still continue in Q3, Q4, which tentatively basically means that credit costs still remain extremely high on their balance sheet. But largely I think the entire scenario reverses from the first half of FY18 because there is going to be absence of interest rate reversals, credit growth picking up. My own sense is that banks like ICICI Bank should keep on doing well. HDFC Bank is something that will still continue to prefer in terms of their stellar and similar performances that meets out quarter after quarter. So HDFC Bank, ICICI Bank, and within the smaller private space, I look out for a company like Federal Bank. But my own expectation is that the slippages should be controlled in a far better manner. Credit costs should come down from that 120 bips annualized in FY16 close to 80 bips in FY18, which would basically mean ROAs improving to 0.9% and ROEs basically improving back to that 10% with loan growth taking place at 17-18%. So in a staggered manner in the next few weeks, I think within the private space, ICICI, HDFC Bank, Federal Bank is something we'll continue to like over the next 15 to 18 months.
Stay on, Mayuresh, lots more to talk about. Let's get a sense of what dealing rooms are recommending in the session today. Darshan and Yatin join in with their sense of their dealer checks rather. Thanks so much both of you for joining in. Yatin, let me start with you. What are you picking up from your sources?
Well, Neeraj, we have Axis Bank, which is one of the top gainers in the private banking space, and today we have seen a lot of build up in the F&O space. So that is one stock wherein dealers are indicating that domestic funds are quite aggressive buyers for the trade today. Of course, next week probably we have the results. So ahead of the results, a lot of build up happening for Axis Bank. Also, watch out for Tata Global. That is one stock wherein dealers are recommending a BTST based on F&O trends. And in the cash segment, two stocks to watch out for mid caps, namely KC International and DCW. These are the two stocks wherein HNIs have been buyers, and dealers are indicating a 10 to 15% short term upside.
Thanks, Yatin, for that. Darshan, come to you. What is it that you're hearing from your sources?
See, Tanveer, Infosys again is in focus today. Numbers were in line, but the guidance cut that came out, lowering the top end of the guidance, and the commentary that followed was not very encouraging. So some of the HNIs are actively shorting this counter. They believe that the upside, at least in the near term, is capped, and also the commentary on the visa issue, what will happen with Trump coming in. There's no clarity as such. So IT as a pack is the general avoid at this point of time. They believe in limited upside that will come in. Lotus Lab, which was recently listed, that is seeing accumulation today. One of the domestic funds is the buyer in today's trade, and everything will be active ahead of numbers. DCB Bank will come out with numbers tomorrow. So ahead of the numbers, some of the HNIs are actively accumulating the counter. They believe that the numbers will be rather strong for the bank this time.
Okay, thanks a lot for that, both of you, for joining in. Quick round of closing strategies, then we get the marathon men to CK Narayan first, and your top closing strategy, CK.
TST on Gas Authority, GAIL, which is pushed to almost a new high, and certainly I think in recent time it would be the highest close if it were to shut shop here. Look for a BDST trade with a stop placed at about 447 and targeting 462 tomorrow.
Siddharth, what about your strategy?
I would suggest shorting TCS at this point of time, and I'm expecting it to move towards 2150, 2180 odd levels. So, but this would be more of a short-term trade from 3 to 4 days perspective rather than a big position one. So short TCS.
Now, what about your strategy into the last 10 minutes of trade?
It would be a buy on Gitanjali, a pure mid-cap name. Stock is heading towards a weekly closing breakout, more or less in similar lines to what we've seen for a lot of mid-cap names. I believe 67 is the hurdle for Gitanjali. I think if it's inching towards a breakout over there, would look out for a target of at least 74. Keep a stop loss of 63 on the trade.
Okay, thanks a lot for that as well, Kunal. Okay, Mayuresh, before we thank you, what's the view on TCS? Are you buying the stock at the lower levels?
So again, I think I'll wait for better entry points, which basically means that yes, I will assume that the stock might go further down. The numbers were more or less in line with estimates, and again, I think it's going to largely hinge in terms of what statements Trump will give on the 20th. So I think the markets are probably expecting some sort of statements to come through and waiting for those statements. So again, I think it's going to be a wait and watch mode in terms of the actually policy announcements related to IT in terms of outsourcing and so on and so forth, which has caused a major headwind to IT companies along with Q3, Q4, which are traditionally weak quarters, and the numbers are reflective of the fact, even in terms of how Infosys has reduced its guidance by 20 whips from the higher end in constant currency terms. So again, I think the valuations remain extremely attractive, and structurally the story is extremely positive in our opinion. My own sense is that one should really wait for better entry points, which should come over the next few days or weeks. So I think wait for better entry points. I think better valuations for IT companies will come, and again I think if one gets those better levels to probably invest, I think then hold on for the stocks in terms of both business transformation that is happening on balance sheets, as well as what might probably happen with visa issues will probably get factored in. So largely again remain optimistic and structurally positive on top tier IT names, but waiting for better entry levels.
Thanks, Mayuresh, for joining in today and giving us your thoughts. Always good having you. Okay, marathon men and two avid runners join in. It's the weekend of the Mumbai Marathon, and this Sunday is the Standard Chartered Mumbai Marathon, arguably the biggest marathon event in the country of India.